Is the tax man coming for your house? Today, join me for a discussion about whether or not the government is going to be taxing your home. And are homeowners now the government's latest target for tax revenues? With new CRA rules, obviously, we're seeing new regulation here and an increase in taxes. And I'm sure the question is sitting on many homeowners' minds. And the question I have is how much more are homeowners expected to bear? So with that, we're going to dive into the CRA regulations, the growing tax policies. We want to break down what the new rules actually mean, especially the change in use rules, and how these affect you, the homeowner. And not only homeowners, that from those of you who are living in homes or for cottages, but those of you who even rent your home and then decide maybe to move back into it at a later date. This article was inspired by the Financial Post article that came out here on October 1st. And it was an opinion piece done by Lawrence Solomon. Opinion piece here: the taxman is coming for our homes. Governments don't tax capital gains on people's homes, but they tax almost everything else about homes that are looking for more. No kidding, especially considering the fact that government has basically spent billions and billions and billions of your money printing it, didn't even earn it, and that has to be repaid at some point. And we have an aging population and ever expanding social programs, of which somebody has to pay for that. So if you don't understand why they keep looking for new and creative ways to take more of what you own, hopefully that helps you understand that. So in this article, I just want to read a bit of this, and then we're going to get into some of the details. Canadian governments, which need ever more revenue to finance their spending, we just talked a little bit about that, traditionally viewed as Canadians' homes as one of the most undertaxed assets. Well, I have a question. Why, if you've paid for your home, you've paid probably 3 times what it's actually worth, because most people mortgage their home and then there's interest that you've paid on it. You've probably paid taxes on it if it was a new home bill, and GST or HST if you're living in the eastern provinces. And now the government is going to tax it again. Where does it end? Oh, the short answer is it doesn't. The upshot: governments have been filling their coffers at the expense of homeowners, relieving them of their cash and sometimes their homes. People go, well, the government won't ever take my home or take my cottage. Well, let's explore how exactly the capital gains tax, and they have been doing this, and now basically they're just exaggerating it and making it worse. The federal government's recent increase of the capital gains inclusion to 67%, anything above $250,000, right? This basically, a modest cottage. Let's take a cottage, for example, that maybe your grandparents purchased for $20,000 on the lake somewhere back in the 1960s, and now maybe it's worth more than, $2 million. With roughly 1.3 million of that is now taxable, right? 67%. Let's think about your children. You as a parent, you're thinking about what you're going to leave to your kids, maybe making things a little bit better. Maybe you want to preserve your legacy. Maybe you just want to preserve those sentimental memories and make sure that they're there for everybody to enjoy for the future generations. Well, now you are going to be faced with an inheritance tax, basically, because when you die and you leave this to your children, they are going to owe pretty much $650,000 in taxes. And if they can't come up with that $650,000 in taxes, what's the alternative? Then they are basically going to be forced to sell that property and the traditions of, that family memory that you've had in your generations, probably for a long, long time. So this is basically what this article is pointing out. And then it also brings up the fact that Airbnb, let's talk about renting platforms. So you have purchased a home, you've been renting it out, and let's say you decide to move back into it at some point down the road here. And now as you move back into it, the government is basically telling you that you will have to pay a tax on that home because indeed, it may have been deemed sold. So here's how the short-term rental squeeze has kind of put pressure on everybody here. This change in use rule, it's under CRA. They're deemed to have sold their home to themselves and must pay HST on the full market value. So you have been renting your home, you know what, you've decided no longer to rent it, you're going to move back in. You yourself have been paying the property taxes on it. You yourself have been paying the upkeep on it. You yourself are paying the mortgage on it, which you're paying interest, which is, yeah, you get the idea. And now you are being told that if you move back into this home, potentially because of this change in use rule, you will have been deemed to have sold this home to yourself, and you must now pay HST on the full value. So I'm just going to give a $1 million home price. Let's say, you know, you're living in Ontario. HST is 13%, $1 million home. That's $130,000 now that you're paying to CRA because you simply decided to change where you live, even though it's property that you own. So the rules have gotten to the point where I don't know how much more people are going to tolerate, to be honest. And I'm hoping that it ends soon. So in this video, I need you to start thinking about who gave the government this kind of power to not only tax you once to buy something, but to tax you again to maintain it, to keep it, and then to tax you again if you sell it, and then to tax you again to give it or pass it along to your children. When is enough enough? I mean, that's the question. So governments across Canada are having to increase their revenues because people continually demand greater and more social programs, and we can't even afford to keep up with the ones that we have. Canada Pension Plan's a perfect example of that. It's an in and out. It's a payroll tax that everybody pays into. Businesses pay, and particularly a hefty cost for that program. And the truth be told, it in 2026, according to the CPP themselves, the revenues that are coming in from, you know, contributions that are being made, contributions, I love that, the taxes that are being collected, they're no longer going to keep up the distributions going out. Why? Because we have an aging population and more people are going to be drawing their CPP into retirement. So they're desperate. They absolutely need to fund their social programs in order to keep people happy, people that have been paying into these types of things for years. They don't want the game to be up. So from property taxes to capital gains on home sales, the taxman continually tends to deepen its reach into what we once considered, you know, a safe investment. And I've often told my clients, investments are investments. Your home is not an investment, and the government is slowly but surely making sure that you begin to feel like it is more of an investment and that it is not your property, it's your home. This is where you raise your children. Your cottage is not an investment, it's your home. It is where you enjoy and you create those forever memories with your family. So, you know, the fact that more and more now we're seeing that kids will never enjoy the same standard of living as their parents. And we're seeing that with the productivity lack thereof in Canada. OECD has already said we're one of the worst countries in the world as far as productivity and our standard of living. It's going to be continually decreasing. When's enough enough? Well, I guess that's up for Canadians to decide, and right here in Alberta to decide. If we are going to take a look at the change in use rule, this rule applies when your homeowner rents out the property and then decides to stop either renting or living in it, as well as if you own property and you know, it's being you pass on and then it's being handed down to families. But this change in use rule is particularly troublesome because, you know, the fact that you already own a property, you're paying for the property, you're the one who bears all the costs, you take all the risks. The market could go up or down, you don't know. And then the fact that you just choose to move back into it only to be slapped with a tax, you know, how are you going to manage that? You know, if you own $1 million property and now you're taxed another $130,000 on that, you know, it begs the question, where does the money come from, right? You've got to go earn that money. The government can go print money, but last time I checked, you know, most of us don't have money trees in our backyards. And then I want to talk about how this plays into the affordability crisis. So Let's take a look at housing affordability. So the government continues to look for revenue sources. Homeowners are bearing the brunt of that decision, unfortunately. Once considered a safe investment or, a safe purchase, I would say, homes are now becoming more and more financial liabilities due to the tax policies that the government themselves are imposing upon you. In 1972, when the federal government made the decision to exempt primary residences from capital gains taxes, since then, however, there's been numerous clawbacks on that. There's been an article that mentions that Toronto added a land transfer tax in 2008. Those taxes have been increasing ever since. As the taxes themselves continue to pile up, owning a home is less and less more security and more about just trying to survive this financial onslaught that we continually seem to be bombarded with from our own government. Homeowners are now questioning whether or not, property is even a safe asset to invest in. This may fall into a little bit with, and I hate bringing up the World Economic Forum here in the WEF, but you will own nothing and be happy. Let's just make it so uncomfortable and so unpredictable for people to own a home that maybe just renting is a better option. And who's going to own those homes? Oh, maybe the government will own those homes. So in 1982, CRA also introduced rules that limited tax exemption to one family property, eliminating tax saving strategy that many homeowners relied on at the time. So here's the thing. I am an individual. My husband's an individual. Yeah, we're married. We come together under one household, but I own property. He owns property. He's not me. I'm not him. And, in 1982, the CRA said, well, that's nice, whatever, you get one exemption for property per family. And here's a question. So do you think that government tax policies are contributing to the housing affordability crisis, or do you think they're helping? So, here is a typical scenario where the government typically will put out a call, look at us, look at the great things we're doing. You're seeing this now with Justin Trudeau and how they're extending mortgage timelines, terms to 30 years. And we're going to talk about that in a different video because that is not going to help anybody. It's like, let's make it more affordable by making it more expensive and more costly to the individual rather than solving the problem. But this is a perfect example of the government continually creates problems and then the government continues to propose solutions which are not solutions, and we see the negative effects of them often 2, 3, 10, a decade, a generation down the road, more hurtful than helpful. So I just want to conclude today a little bit by saying that especially the Canadian homeowner, you're faced right now with an ever-growing list of taxes and the overburden of regulation that is making property ownership almost impossible. It's very complicated at best, and it's becoming more and more costly. So whether it's CRA's changing use rules to capital gains, beyond, the financial pressures that are mounting on just everyday Canadians is just continuing to grow. And I want to hear what your thoughts are. What do you think should be happening? I want to know whether or not you think the government, through its superior knowledge here in economic policy, which has just proved to be fatal to the Canadian middle class, in my opinion, should we be reducing taxes? Should we be increasing taxes? They keep arguing that this is about going after the wealthy. I don't think the average family that owns, a little cottage that was passed down to them from grandma and grandpa to, son and daughter, then to grandchildren, I don't think that is the rich that they keep touting, but those are the people who are being hurt by these types of policies. And they know that. It's really just how do they spin it to make it applicable for people who don't have a cottage or haven't thought this through as to how it might impact them. Let us know your comments. Please do like, please do share. Let us know what you think. Leave us a little comment and, we'll be happy to get back to that, answer some of the other questions, brought up some things again today that are worthy of thought and discussion in future videos. Please do like, please do share. And let us know what you think about whether or not the government should be encroaching further and further into the private lives of individuals and into your personal property that you've bought and paid for and paid taxes on numerous times, only to find out at a given notice it's going to be taxed even further. Have a good one, everyone. God bless.